Nebius shareholders just got great news after hours as the stock is up nearly 41% after a massive deal with Microsoft. On today's episode, I want to take a closer look at this, and I also want to talk a little bit about the big elephant in the room, my position in Coreweave. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Nebius right now is sitting at about $90 after hours with the stock up nearly 41%. The main reason is this. Nebius announces a multi-billion-dollar agreement with Microsoft for AI infrastructure. Now, we're going to look into the specifics of this, but overall, it is creating a huge momentum in a lot of these AI companies, these AI infrastructure companies. And if you have been following this channel, just 3 weeks ago, I did an episode talking about 15 or so of these players. We can see Iron up about 8%. We can see Cypher Mining up about 7%. You also have other companies like Hut up 3%. You even have my favorite right now, Coreweave, up nearly 6%. Now, what this deal really much is showing is that the AI infrastructure is extremely compute constrained. And that is a thematic we have been discussing in this channel. Now, if we go a little bit more into what happens in this agreement and the overall multi-billion dollars, we get to understand what's happening. So on September 8th of 2025, Nebius entered into a commercial agreement with Microsoft, which will provide Microsoft access to dedicated GPU infrastructure capacity in trenches, each a GPU service, at its new data center in Vineland, New Jersey, over a 5-year term. Now, the GPU service will deploy in several trenches during 2025 and 2026. Subject to the satisfaction of the deployment and availability of GPU services, the total contract value is about $17.4 billion through 2031. Remember, Nebius prior to this had a market cap of $15 billion. This contract itself is worth more than the company, but obviously caveat is it's through a 5-year time frame. Now, Microsoft may also acquire additional services or capacity under the agreement, which could increase the total contract to about $19.4 billion. Cash flow coming from the agreement will be utilized to finance part of the capital expenditure associated with the agreement. Now, we're going to look at the other things, but I want to talk a little bit about this. So cash flow coming from the agreement will be utilized to finance part of the capital expenditure. This is something that I've talked about in the past for Nebius. Nebius is a company that is building AI infrastructure, and it typically had a clean balance sheet. But to build massive AI infrastructure like this, that debt is going to increase dramatically. I don't believe that debt is bad if you understand how it works, right? It's coming in through these agreements. They have to buy these GPUs. You can't go to NVIDIA and say, you know what, can I pay you? Can you only charge me per monthly basis on these GPUs? NVIDIA will say no. They're going to give it to you. You have to pay them pretty much upright. You need to finance it your own way. And that's how they're going to do it. They're going to finance it in their own method. And then this cash flow is going to help pay it off. But if you are a Nebius shareholder, be prepared. Be prepared for the balance sheet to start looking a little bit wonky, something we talked a little bit in this. But $17.4 billion, pretty strong for 5 years. It can go up to almost nearly $20 billion. Now, they mentioned in the event, following a grace period, company fails to meet agreed delivery dates for a GPU service, and the company cannot provide alternative capacity, Microsoft has the right to terminate the GPU service. Either party may terminate the agreement for cause due to the other party's material breach, if not remedied within 60 days. Or if the other party ceases doing business, terminates its existing, dissolves, or liquidates. So there are some clauses behind here, and we now understand if Nebius for some reason fails to deliver on the agreed dates, Microsoft can back out. And this is a little bit scary in my opinion, but I do believe it's very typical in the AI spaces. What happens if Nebius is unable to get GPUs from NVIDIA? Luckily, they are an NVIDIA preferred partner and they get to get some of these new advanced GPUs quickly. So that helps it out. But it is important to not only think about this for Nebius, but if you are a shareholder of some of those other companies, most likely certain agreements like this, similar agreements like this, are being made. So if you cannot meet the agreed delivery dates on those GPUs, either being a GPU halt, infrastructure halt, something going wrong with the data center itself, it could terminate a multi-billion-dollar opportunity like this. So something to understand in this space. Now, I also wanted to talk a little bit about this Vineland, New Jersey data center. What do we know about this? The company, during their most recent earnings, gave us gave us information. They say they now have 200 megawatts of contracted power that is in active construction in New Jersey, of which 100 megawatts will be made available this year, with the rest following in 2026. So it seems like this New Jersey data center is only a 200 megawatt data center, and it's going to come out in trenches here in 2025 and in 2026. Pretty much what we heard here, right? The GPU service will be deployed in several trenches during 2025 and 2026. My thought process here at first is 200 megawatts equals about a $17 billion opportunity in 5 years. We talked about other companies like Coreweave that have a lot more megawatts. Now, does this mean that they're going to increase the amount of power capacity here, or is it just purely that 200 megawatts? And I like this because now if they do update some of the numbers, we can actually do reverse math on how much revenue can actually come per active power that they have, or contracted power that they have. Here, at least from what we know, about 200 megawatts of contracted power can equal to roughly $17 billion or so in about 4 years. Now, obviously, this is very good for the company. And I do believe, again, like I mentioned earlier on, it shows a strong indication of where we are in the AI space. Now, I mentioned I want to talk about the elephant in the room. I actually posted this on the overall report on my Twitter. Someone responded, "Didn't you say that Coreweave is much better pick than Nebius all the time?" I agree. I still believe I am still more and more a Coreweave bull than Nebius. I have never said anything bad about Nebius. I actually own both companies. And yesterday, I actually did an episode. This is Coreweave versus Nebius, which AI stock will dominate in 2025. In the episode, I pretty much talked about the top level bullish thesis that both companies can benefit from the AI infrastructure. I'm personally more invested in Coreweave and will continue to do that. Obviously, a deal like this can change the short-term perspective of things, but in the long term, I think both can benefit, and CoreWeave has a lot more AI power available to it. Now, I think obviously Nebius shareholders have a lot to be excited about right now, but for me, as a shareholder of both, and especially more of CoreWeave, it tells me, Jose, CoreWeave has the opportunity to share very much similar deals like this that could be even worth more and more than where it's at right now. So for me, I still stand with where I mentioned yesterday's episode that I prefer CoreWeave over Nebius, even though both are in my overall portfolio. This one is going to continue to be a bigger position. Now, there might be some jealousy and envy that ends up happening, right? Some person might have chosen Coreweave, someone might have chosen Iron, someone might have chosen Hut, some might have chosen CleanSpark or some other kind of AI infrastructure, and they look at Nebius and say, look, I chose the wrong one. I think this is the time to be a patient investor, because I do believe for this whole ecosystem, we are going to continue to see deals like this announced almost on a monthly basis. I mean, we recently saw a deal with TeraWulf. We recently saw a deal with Core Scientific. We recently saw a deal with Iron announcing massive AI compute. I think we are still in early innings. Certain might get more deals at the beginning, but I think this whole ecosystem is going to grow. And if you are a Coreweave shareholder, the last thing I'm going to do is sell my shares and go for Nebius, because I think Nebius is bigger or better. I think Coreweave is going to have its time to shine. And it's pretty funny, right? It's obviously pretty funny that I did do this video where I talk a little bit more bullish on Coreweave, but I'm still sticking with what I'm saying. Both can benefit dramatically from this AI space. I am more excited about Coreweave, about this deal, because I talked about active power in yesterday's episode. And we see the difference in active power available with both these companies. So congratulations to the AI infrastructure market. Tomorrow, we do have Oracle reporting earnings. And if we hear great things about Oracle, I do believe this overall AI infrastructure market can continue to pull a nice way up. So take care, have a good day, and see you all next time.